handle short sales all over the state of Florida, and that's magical. So you have a lot of experience. You have closings coming up. You have a lot of insight. You track all the list pendants in the state of Florida, which are pending foreclosures. So you see a lot of things people don't, because you're in the trenches, so to speak.
Yes.
And our whole world's been upside down lately with COVID and moratoriums, and obviously the recent announcement with the Supreme Court saying that no, they're not going to allow this eviction to continue. July 31st is the final date for evictions. That seems that's going to create a ripple effect moving on. So that's me just kind of talking. Dave, I want to give you the floor. Tell me what your impression of this is at this point.
Well, it's interesting because with the moratorium on foreclosures, technically Fannie Mae and Freddie Mac, their moratorium was supposed to end on February 28th. So the moratorium that's been in effect has been for government-backed loans, which is VA, veterans, USDA, and FHA, which is HUD. However, it seems like even whether it's a private investor or Fannie Mae or Freddie Mac, they really don't want to step on the government's guidelines toes. So they've been extending out their moratorium unofficially and not really foreclosing on a lot of people, even though there have been some foreclosures, but a lot of them, they keep on getting postponed. As we know, it has been extended out until the end of July. With that being said, there is verbiage on the CFPB website, which is the Consumer Financial Protection Bureau. We've talked about that a lot. And that states that if a homeowner is in a forbearance program before the moratorium ends, then and they get accepted for the forbearance program, that will extend them out 3 months. They are able to apply for 2 programs within the year, which would actually put them out until the end of January 2021. So, the reality is that there's a lot of people who need help out there, because as we're talking about the ripple effect, you can't just foreclose on everybody. There's a lot of people who are affected directly because of COVID. Unfortunately, there are a lot of people who have also were in the foreclosure status before COVID hit. And I see a lot of files that we work with that date all the way back to 2018, 2019 already. I mean, we're back 2-3 years.
So before COVID, we had a natural flow of foreclosures that were going to hit the market.
Absolutely.
And because of COVID, and those actually got stopped pretty much, or they got delayed in a lot of cases.
Yep. Everybody was protected. And even if the private investor, a lot of people don't know this, US Bank owns a lot of loans in the United States. They're one of the biggest private investors out there. People will see on their foreclosure notices that it'll say Deutsche National Bank, and they tell me, or they ask me, who's Deutsche National Bank? It's the investor of the loan. It doesn't matter who the servicer is. It doesn't always say Fannie Mae or Freddie Mac. If it's FHA, as we know, it's HUD. That's one of the biggest things that I have seen over the past 18 months is 40% of my business used to be FHA foreclosures, which is the Department of Urban and Housing Development.
Right.
Those are obsolete anymore. VA loans, that nobody's foreclosing on VA. USDA is not being foreclosed on. USDA actually won't even open up a short sale program right now. We had a client of ours who was trying to do a short sale, got hit by a hurricane a couple of years ago. The roof still has leaky, watery damage in the property, a lot of fix-ups and repairs that needed to be made. He just wanted to get out of his property. We tried to work out a short sale. USDA wouldn't even allow it. So USDA, FHA, and VA are completely on hold. So the only foreclosures that we're seeing right now is actually Fannie, Freddie, a little bit, but mostly the private lenders. When all 5 of them, when the moratorium ends and all 5 of them are going to start going through the foreclosure process, it'll be interesting to see, obviously, who qualifies, who doesn't, what the stipulations are. A lot of us have seen this that happened in 2008 with the crash and, the Making Home Affordable program with Obama.
Mm-hmm.
So we'll see what happens, but we definitely need to have a lot of programs that are going to help out the homeowners who need the help the most.
So right now we have a couple million homeowners that are not making their mortgage payment. Is that correct?
Yeah.
And so the forbearance has actually been slowing that process down. We can see that numbers are coming down on forbearance, but not fast enough. Would you agree?
Right. Yeah, absolutely. Yeah.
So at one point, that's all going to come to a head, and then what?
Well, that's a good question. Again, I always kind of reiterate this, the Making Home Affordable program, it was like there was a lot of people where it was putting a Band-Aid on a compound fracture. It worked for 3 to 6 months, get through the forbearance, try to get a loan modification. And unfortunately, I remember with that program, I believe 85 to 90% of people who qualified for a loan modification or forbearance ended up in default again within 6 months. Well, once you default again, then you don't qualify for another forbearance or another loan modification. So we'll see what happens, see what happens from there. But there's definitely going to be a wave that's coming. I don't think that we're ever going to see anything like 2008, or I should say 2009 really is what we dealt with, the aftermath of the 2008 crash.
Okay, let's talk about this first little wave that's happening right now. The fact that evictions are going to stop, and they're going to stop within 30 days now. In a month, we're going to start seeing that evictions can go full force, and that's going to create a lot of havoc to some degree. But how do you think that will affect our housing market?
That's a really good question, Troy. That is a very good question. It'll be very interesting. I don't think we're going to see anything close to what we did, like again, 2008, 2009. I don't think we're going to see anything like that because there's no subprime mortgage market, but there is definitely going to be a large wave of foreclosures coming through. Before the moratorium hit, there was 2,000 to 3,000 notice of sales, per month taking place in the state of Florida. And now there's still been, between 700 and 800, sometimes even 1,000 per month, even with the moratorium. Now, most of those people just keep on getting extended out, but I can't imagine that we're, within, I would say 12 to 18 months, we're probably going to see numbers around 3, 4, maybe 5,000 a month for a while.
Well, it's interesting. I mean, obviously a bank doesn't want to foreclose on a house if there's a tenant in place that they cannot evict. I mean, that would seem to be a very problematic situation. So that's gonna be resolved in the next month. I mean, eviction is going to go back and flow. You have a lot of owners that want to sell, they can't, they have tenants in place.
Yeah.
Now they're basically are given ownership of their property rights are given back to them, so to speak.
Right.
So obviously that it would seem that that's going to create inventory that's not possible right now. Right. And it's also segueing the banks to make it easier when they have to start foreclosing that it's possible to evict. I mean, where that's a challenge right now.
It is. That's a whole different ballgame too with the eviction, because if the property, is sold at auction, there is ways around it where the investors go in, they hire attorneys, and they get people out of the property within 10, 15 days, by serving them a notice. I don't know exactly how they do it, but if the title is being transferred, they're not taking over a current lease. But again, that's a whole different discussion that we could, talk about for, hours and hours and hours. But what you're going out, what we're talking about though, is all of that's coming to an end at the end of July. Right. And government has finally stepped in and said, okay, we're gonna give another 30 days, but that's it. We've got to start getting some programs available for these homeowners. And I actually read just this morning that there are 3 specific guidelines that the banks have to go through to find out, do the homeowners, do they qualify for forbearance or loan modification, trying to get a hold of the homeowners. That's one of the biggest things. Sometimes people in this situation, we call it putting their head in the sand. They don't want to deal with it. It's been going on for so long now that they don't really know what to do. I urge, everyone, if you're behind on mortgage payments, if you're trying to save your property, pick up the phone when your lender calls, because they're probably trying to get a hold of you to work out some type of a program for you. See what options are out there.
That's good. What about the homeowner that does not want to maintain ownership of their property?
That's where we come in. I call our program, it's a short sale program. It's kind of like the last ditch effort, or I explain to this way to everybody. Our program is designed for people who either, number one, want to sell their house to get out from underneath their debt, rebuild, wipe the slate clean, and get some moving money to help them do that. All of our services are free of charge. Number two is, unfortunately, people who have to sell their house. Either they can't keep up with the repairs, they're in a place that really isn't habitable anymore, they really shouldn't be living there, it's not very safe. Or unfortunately, a lot of times their lenders will tell them, listen, you don't qualify for a forbearance. We gave you loan modification before you defaulted on it. At this point, your options are bankruptcy or look at settling a short sale with us. And they'll flat out tell them, you need to take a look at a short sale.
So you have a lot of experience with short sales. And
yes.
Helping owners out in that regard.
Since 2010.
So have you seen short sales slow down because of the pandemic?
You could say that, yes.
Slow down or almost slow down to stop, right?
By about 90%. Yes.
90%. So
yeah.
So we're basically seeing the world open up again. I mean, with
absolutely.
So that means that 90% is going to start hitting the market again.
Absolutely, and I think that's kind of the flood, so to speak. There, it's almost like a dam has been building up, because I feel like with a regular real estate market, you have people go through short sales because of divorce, death of a borrower. Unfortunately, we deal with a lot of that, a lot of probate cases. People get sick, they file bankruptcy, loss of job. There's a lot of reasons why people fall behind. And sometimes after a while, they just want out. They want to get out from underneath their debt. They want to move on. The house is too big for them. A lot of times we hear that there's too many fix-ups that are taking place. And that's a regular real estate market. Well, when you put a stop to all those foreclosures, those are people that are going to sell either way. The only reason why they're short sales is because they owe more than their property is worth. They're behind on mortgage payments. As most of us know, once you're 90 days or more behind on mortgage payments, the probability of getting actually caught up on a repayment plan is, I think, less than 5%. So you have to get approved for a loan modification or a forbearance program. But through regular, let's call it attrition, where people are going to sell those properties either way, as this dam has been building up, what happens when the dam finally breaks? And now we just have to filter through our normal short sales and our normal clients. We have to catch up on all of those.
Yeah, absolutely. Well, obviously we've seen a lot of appreciation happen the last year, Florida, a lot, and that was not expected. I know in pandemic, when we were seeing businesses close, and there was a lot of prediction that things were going to go south, because we had a decade of a very healthy market for a while. And obviously, there's a cycle, and after a healthy market, you're expecting a downturn. And then we had a pandemic,
right,
and nothing but the opposite happened. We've seen real estate spike.
Right.
So there are owners, obviously, that feel they have equity. But what happens when you haven't been making your payments for some time? I mean,
right.
That they is there a possibility they might be overconfident with the adjustments that could take place in the marketplace coming up?
Well, that's a good question, and I think the what that leads into as well as are people going to be able to stay in their properties for 3, 4, 5, 6 years without making mortgage payments, because there are so many people in need who need who need help with a program that's going to help them out. Do we have that type of stuff in place, or are things going to get lost in the shuffle again? Or are we going to end up with the banks just getting backed up and not being able to service everybody at the same time, and someone gets loan, their loans just get lost in the shuffle. So it'll be interesting to see what takes place with that, because from what I've seen, internally with the financial institutions, they kind of still, run about the same type of programs that we have for the past decade or so. That's not a bad thing, but when it gets over flooded, then things get lost in the shuffle. So I think, it'll be very interesting to find out, do we have in place what needs to be in place to put the proper people through the forbearance program to get the people loan modifications that need them? One of the biggest things that I hear on the phone when I talk with people is, what programs are out there? You've got forbearance, loan modification. Those are the two ways to keep your property if you're behind on payments. Other than that, you can reinstate your loan, which is pay it back all at once. Try to come up with a repayment program, which is almost like a Chapter 13 bankruptcy. You're going to pay your current payment plus an extra $500 a month. Most people don't qualify for that. Other than that, you've got a short sale, a deed in lieu of foreclosure, where you give your keys back to the bank. Maybe they give you $2,000 or $3,000 or $4,000, and it still ends up in foreclosure. You've got bankruptcy and foreclosure. That's it. There's no special program out there of, well, maybe I haven't heard of something. Those are the programs. Every bank has the same programs.
Yeah, and ideally, if somebody's in an unfortunate financial situation, the goal is to recover from that, correct?
Absolutely, yes.
So I know a lot of people think if they prolong this, it's going to get better, and it doesn't necessarily mean that's the case.
Right. Right.
But I guess one thing I was getting at is just with appreciation that we've seen in the last year of Florida, owners have equity, or they have perceived equity in their property. And if they go to sell that property and they find out that, wait, maybe they don't have as much equity as they thought they did, or if the market adjusts a little bit, even though they're not underwater now, it's possible that they could be.
Correct.
And if their home is not marketed with a short sale broker agent, that could be problematic. Would you agree?
Absolutely. You brought up a very good point. There's a gentleman I spoke to literally today on the phone, and we went through his mortgage statement with him. He had a principal balance of just under $300,000. So he thought that, hey, my payoff is $300,000. My property is worth about $4 million. I've got plenty of equity in the property. The reality is as I looked into it further, I found a second mortgage or a lien on the property from the Florida Housing Financial Corporation from 2000 and I don't know what it was, 3-4 years ago, for $42,000. That was kind of like a forbearance program where the state of Florida was stepping in to help people out who were behind on mortgage payments, help them keep their properties. In addition, he's also behind on mortgage payments, $58,000.
Oh gosh.
So in reality, I had to explain to him that the principal balance is the principal balance, but you have to add up all of the missed mortgage payments on the right-hand column. Now you're adding that with the principal, but wait, there's also like a forbearance program that took place that moved it to the back of the loan for another 42. All of a sudden he owes $400,000 on his property that is worth about $400,000. Well, you still have the cost to sell a property in the state of Florida, or just
Right.
well, in any state. It doesn't matter if it's our state or not. So because of that, he's actually upside down in the property. That it happens that fast. So as people are, trying to hold on to it, are they keeping up with the missed mortgage payments, with the attorney's fees, with the escrow, and with everything taking place with the property, and also the upkeep with it as well? That's the biggest thing. It's an interesting game that's being kind of played there.
Yeah, during the last cycle we had downturn, I saw a lot of sellers try to short sell their property, and they would list the property with the neighborhood expert or a relative or a good friend of theirs that they meet on a weekly basis, because that's how real estate you handle that, right? And so what's the short sale? I mean, what's the difference between that and just a normal sale?
Right.
But if that agent had no experience, just like going to your dentist and saying, will you do brain surgery? Or your brain surgeon say, will you do my dental work? They don't know how to handle a short sale. Have you seen short sales fail because the agent has no idea what they're doing?
Yes. And unfortunately, I don't like to say it, but we list several properties every year of houses that were in a short sale situation with another brokerage or another real estate agent, and I talk with the homeowners and they say, well, the bank denied the short sale, we can't do a short sale. Okay, well, why is that? I don't know. The agent just said that we can't do a short sale, we came to a standstill. A lot of times what that turns into is there's a lot of junior liens on the property, there's judgments maybe against them, other things that we have to work out. And so the more moving parts there is, the more difficult that it is, but you just have to work through them one at a time. And so we end up closing quite a few short sales every year from, unfortunately, other agents who have tried to list it and sell it as a short sale and just weren't successful with it.
be handling a short sale is a specialty niche.
Absolutely.
And just give me a little elaboration, like you were talking about junior liens, IRS, just real brief. What are some problematic things with a short sale that maybe another agent would, if they haven't had the experience in handling short sales, could be challenging?
I think IRS tax liens are the biggest ones, just trying to get those removed. So that's a little bit of a different process. HOAs, liens, those are pretty simple. Contact the homeowners association, find out what they're willing to negotiate and accept. If it's already with an attorney, you contact the attorney, with the law firm. But some of the other liens that we see, private lenders, home equity lines of credit, personal judgments. So, sometimes you'll see stuff like that. Capital One credit card is another one. Capital One credit card and Citibank. Sometimes people don't understand that, that those will actually, those kind of companies will actually file liens against the property. So there are times when you pull up title and you take a look at it, and I'm talking with the homeowner on the phone, and they've got one mortgage in a homeowners association, and we pull the title report and look at it. We've got a private lender. We've got a credit card that's been in collections from US Bank or whatever, Capital One. And then also maybe you've got like a home equity line of credit or what is it? Aqua Finance is another one for the water filtration systems. So we see that all the time, $5,000, $6,000, $7,000. People don't know that those are on there. We've seen stuff before for people who put new houses or windows. Obviously, you've got the mechanics liens on the property. All that stuff adds up. All of that debt has to be settled. That's one of the biggest reasons why people go through us and have us negotiate the short sales, because the number one goal is to walk away free and clear of all that. The only thing that you cannot walk away free and clear from is an IRS tax lien. We cannot pay the IRS $3,000 or $4,000 and they remove an $80,000 tax lien as accepted as payment in full. That's not going to happen. But with the other liens that we take care of, even with, we just paid off a $85,000 second mortgage and gave them $6,000 and got a full lien release, or not, I'm sorry, not a full lien release. They accepted it as payment in full. Both them and their investors of the loan. They're walking away from their second loan and their first mortgage free and clear.
So when a seller,
that's one of the biggest reasons.
No, it's interesting. So when a seller lists their property with you to represent them, you go to back for them to negotiate down all those liens.
We have to. Yeah.
Get to a place where it works. So this is something way above and beyond holding an open house and putting bread in the oven. I mean, you really you're going deep with the sellers, lenders, and creditors, and negotiating all those out. And obviously, if a seller's looking to have somebody represent them to negotiate those liens out, you have a lot of experience with that, right?
Absolutely, yes, yeah, it's a whole different animal. And if you just take it and flip it, this is all I have done since 2010 full time. So when sometimes people will come to me, friends or family, and say, "Hey, I'm looking to buy a property in the area. Can you represent me?" And I will flat out tell them that, I can refer you to one of our top buyers agents, because I don't work with buyers. I don't specialize in buyers. You want to work with someone who's at the top of their field, who's the best of the best at what they do. That is not what I do. It's not what I specialize in. So I don't want to give you a disservice. So, it's important to be with somebody who specializes in what they do, right?
That makes sense. That makes sense. And obviously, your services are going to be in great demand coming up here as we see the market kind of come back to normal, would you say? Or at least
I hope so. Yeah.
I mean, because would you say that we're in an artificial market right now with the government printing money and
it's an artificial everything. It's been, I don't think there's anybody who's going to say that the past 18 months hasn't been something that, nobody foresaw this coming. There's no way, nobody did. So the whole thing is just very interesting. But you said a very good word though, back to a normal market. What we don't need is a crash. There's no reason why we should have one. People need to be helped out. We need to get back to a sense of normalcy. And in a normal market, for instance, in the state of Florida, we have 21.7 million people. Just through regular Like I said, attrition, bankruptcy, all of the factors of life, you're going to have a certain amount of short sales and foreclosures that take place just because of sheer numbers. When you put a stop to those, that's not good. It's just going to back up and back up and back up and back up and back up. And that's where we're at now. So we need to get back to a sense of normalcy. But a crash is not going to do anything for anybody. And there needs to be programs in place to help these people.
So it's not a matter of if foreclosures are going to increase, it's just a matter of when, or would you say that to be true?
I think they have to. Again, just because of the buildup, I think that's the only reason why. I don't think it's because, there's obviously there's more people behind on mortgage payments, but that's not something we've ever dealt with before, right? Mm-hmm. It's not because we had a bunch of balloon payments or, arms. There's a lot of people that, we had 5 million homeowners that their arms all became matured, and now they're behind on mortgage payments, is because of the pandemic. So it's a very interesting state that we're in right now, for sure.
Right. But if someone's in trouble right now, they can reach out to you and say, can you help me with this?
Absolutely. Yes.
Because there are homeowners who are saying, look, I just don't want to own my property now. I think it feels like kind of one of the illusion is that there's a lot of equity out there for homeowners.
Yes.
And that may or may not be true, depending on the condition of the house and other factors that may not be foreseen. Correct?
Right. Yeah. It's the junior liens. A lot of it's the condition of the house that we see. The junior liens, the second mortgages, and the biggest thing that we see though too is the principal balance is the principal balance. But what are the missed mortgage payments? What is the total amount? So one of our homeowners, I spoke with them. This was a couple of weeks ago, and we were talking, and I went through the foreclosure history and everything. And it's been a couple of years, a little bit before the pandemic. And so I had suggested to her, let's call your lender together. Let's call your mortgage lender together. And so I said, I just think that you're maybe not asking the proper question, of exactly what the total payoff is. So we talked with them. I said, what's the payoff? $298,000. Okay. So, and she said, see, yeah, that's what it is. I said, okay. So if she wrote you a check right now for a 10-day payoff, $298,000, that would be the amount, and she would own her house free and clear.
Right.
Well, no, there's back balances and escrow balances and everything else. Okay. If we were going to get a 10-day payoff right now and write you a check, how much would that be? $357,000. Oh, where the other $60,000 come from?
Right.
Well, there's back balances and fees, but sometimes they don't explain that to people. So they see this principal balance. How much of that, how much in arrears are we talking? How much attorney's fees, escrow balances, all of it. So that's a completely separate column. And I think that, that people they're not explained that very well sometimes. Some mortgage statements are pretty clear. Other mortgage statements, I even have a hard time, trying to decipher what's what.
No, that's good information. So again, you can help somebody with all that.
Absolutely. Yes.
So when they hire you, you can get a good visualization, or you can do some research to find out where they are. Even if they have equity, it seems wise to hire a short sale expert like yourself, because if it becomes a short sale, they have the expert in their hands. And if not, you do handle equity sales too, correct?
Absolutely. Yeah. The main thing is most of our clients that we work with have foreclosure sale dates at some point. So the number one thing is we have to get that foreclosure sale date postponed. And if we're, again, if it's close to equity versus not equity, or we're waiting for a payoff, we need to get that foreclosure sale date postponed and see where we're at. So again, we had a client of ours just recently, and we didn't know exactly where it was with the payoff. It was kind of interesting that it was a USDA loan, and we finally get the payoff, and the payoff was literally $40,000 less than what they told us on the phone. So when we went and sold the house, my client was hoping he was going to walk with 10, 12, maybe 15,000. He walked with $56,000.
Fantastic.
But we kept him out of foreclosure. He's obviously able to walk with that. He was very happy with the situation, obviously. But we have to find, we have to get all of the junior liens settled. We have to know exactly where everything is and make sure that we keep that foreclosure sale date at bay. Because If they would have sent that to auction, they would have sold it for what they owe. And then you let the investors bid against that. So they're going to put it out for what they're owed back. If an investor bids maybe $10,000 more, the client only walks with that extra $10,000. Well, because he, obviously allowed us to postpone the foreclosure sale, get things set up the right way, he walked with $56,000. So he was very happy with that situation.
Yeah, and you educated me to a good point. I mean, if someone does have equity, but they are in list pendants, they still need somebody to help them slow that process down.
Right.
They have equity in their house, and you can do that, and hopefully it's not a short sale.
Exactly. Yeah.
But if it is, you have the expertise to resolve that situation.
Right.
So,
well, and just like you said too, Troy, the market's been going up so much that sometimes you don't know what these buyers are willing to pay until you put the house on the market and go get some professional photos. And it's a little bit surprising, it's surprising that some of these houses will sell $20,000, $30,000 or more over list price. And I'm talking about $180,000 to $250,000 home.
Right.
That wasn't our market a year ago.
No, it's I've never seen this. I've been in business 35 years. I've never seen it as hot, but I'm a little cautious because I know last time I remember this happening, I remember what the next chapter was, and it was very problematic. Now, there are signs saying that that's not necessarily going to be the case, but what you clearly said is there are list pendants. I mean, we forget the pandemic. Even without a pandemic, foreclosures have been slowed down, and those still have to flush through the system, correct?
Yeah, absolutely.
So again, I mean, it's good to have a resource, and it's good that you can help them either way. If they have a list pendants filed, they should contact a short sale agent like yourself, even if they have equity, because you just don't know. And you could find that out in a very short period of time, correct?
Well, and I think it's important too to know what your options are, it's extremely important to know that. What are your goals? What are your options? And it's better to get in front of that than to wait until the very end. A perfect example is, we talk with people all the time, and obviously the foreclosing judges. And there's a difference of someone gets hit with a foreclosure sale notice or a foreclosure hearing, and some people end up with the foreclosure sale date of 30 days down the road. Other people have a foreclosure sale date of 90 to 120 days down the road. So what's the difference? Why do some people have a foreclosure sale date after their hearing of 2 to 4 weeks and other people are 3 to 4 months? One of the biggest differences is the people who throw away their notice for the foreclosure hearing. Make sure that you go to your foreclosure hearing. Most of the time they're done on Zoom meetings nowadays. If you just show up to the foreclosure hearing and you let the judge know, hey, here's what's going on. I'm in my house. We've got our kids here. We're possibly looking at a short sale. They will more than likely give you at least 90 to 120 days before they will actually set the foreclosure sale date. If you just rip it up and throw it in the garbage, they're going to say, well, obviously, I don't know, maybe they've already left the property. They obviously don't care. They knew there's a foreclosure hearing. We're going to go ahead and set this out for 3 weeks from now. So just make sure you pay attention to what's coming in from the courts, from your mortgage company, and in the mail.
Yeah, that's good advice, especially with all the unknowns that are upon us at this point.
Absolutely.
So again, a lot of value. As I said, you're doing even in this market where we don't have foreclosures. You have quite a few short sales all over Florida right now.
Yeah, we have just under 20 right now, current clients of ours. So that's a lot for a market that where we're not.
When people think there are no short sales, and yet
we're not supposed to have foreclosures right now, right? But we do.
Yeah. That shows you where your business can be a year from now, or what's could be coming up, right?
Yeah, exactly. Yes.
Dave, is there anything I didn't ask or didn't cover that you think is important at this point to just kind of communicate and to be of service to those that need help?
I think you covered everything. The main thing is the moratorium's coming to an end, and what's going to happen now, and where do you go for help? Reach out to your lender, and get your information up front. Don't wait till the very end.
Excellent. on this video, I'm going to put all your information on the bottom so people can reach out to you, or I mean, on the below this video, should I say, so people can reach out to you directly for questions. And
Sure.
you're a great asset. I mean, it's a good that you have the heart to help people in that situation. You have that experience, because that is such a specialty niche, and just having a real estate license isn't enough. I mean, you actually resolve debts. You go above and beyond to help somebody, in a hard situation.
Right. Yeah.
So,
Thank you.
well, great, Dave. I appreciate your time today, and I think that concludes our meeting with Dave. And again, I'll leave that information below, and we'll sign out.
Okay. Thank you, Troy. Appreciate
All right,
it.
thank you, Dave.
All right.